Hey, this is Warren Redlick. A particular challenge for Tesla shareholders in the United States who have their stock in individual retirement accounts. The critical punchline for this video is that you can see gains of 63% or even 200% by doing Roth conversions, depending on how things play out. And I'm going to explain that in this video. This will apply less for, or maybe not at all, for people outside the United States, but it may be useful. There may be some similar analysis you do in your own country. So if this is helpful to you, great. And also, it can be helpful to understand what motivates US investors with taxes, because sometimes that can play a role in short-term stock movements. Like at the end of the year, people may be selling to deal with capital gains or buying. Those kinds of things happen. So there may be some value in this. But the primary focus here is US investors who use retirement accounts. The particular issue I'm going to talk about in this video is Roth conversions. You have money in a regular IRA, which is taxable when you withdraw the money, but was not taxed on the way in, and a Roth IRA where your money is taxed on the way in, but is not taxed on the way out. And with somebody who's a Tesla shareholder and you're looking to the future and you're thinking, I think this is going to 10x, I think this is going to 20x. What effect does a Roth conversion have? And I was actually a little bit surprised about the results of my analysis. We'll start here. This is my question. I gave this to both Grok and ChatGPT. They both made mistakes. I think Grok made more, and I was more confident in ChatGPT's analysis at the end. We'll see when Grok 3 comes along. And really quick, Threat to Idiocracy t-shirt at elonbits.com, other t-shirts at elonbits.com. Let's start with this. We have a set of tax rates and tax brackets that are in place today. This gets more complicated, and I'll be talking about this in another video in the future. What happens if Trump lowers rates? What happens if a future Democratic administration raises rates? These are things that you may want to think about. Let's imagine the investor has $100,000 in a regular IRA and $50,000 in a Roth IRA. Again, for people who aren't familiar with it, a regular IRA is one where you take your income and you put it into the IRA and you don't pay income taxes on the money that goes into the regular IRA as you're putting it in. But when you withdraw the money in the future, you pay taxes on that in the future. With a Roth IRA, you take money that's after tax. You've paid taxes on it. You put it in the Roth IRA, and then you can withdraw that money later tax-free. Typically, you're limited to something like $9,000 a year that you can put in a Roth IRA. But you can roll from a regular IRA into a Roth IRA at higher volumes. So I've done a couple of $50,000 Roth conversions recently, and this is why this is on my radar. And I've got some other things on my radar, again, I'll talk about in future videos. I'm going to be doing a specific video on my own personal circumstances and a lot of the challenges that I'm facing, and don't feel bad for me, they're good challenges. And that'll be for YouTube channel members, ex-subscribers, Daily Live supporters, and Patreon supporters. So please consider supporting me on those platforms. If you're on X, please become a subscriber. If you're on YouTube, please become a channel member, etc. Imagine the investor has a moderate income of $50,000 a year before the standard deduction. The stock will 10x in 10 years. I'm doing two scenarios here. The first scenario is a 10x. The second scenario is a 20x. And the investor will draw all funds from both IRAs at the 10-year mark. Now, that's not likely how you would do things, but it's a good way to look and see, well, how would this play out? So the investor's thinking about doing a $100,000 Roth conversion now, converting the $100,000 in the regular IRA into the Roth IRA. Now, keep in mind when you do that, and so this gets twisted, you have to pay taxes on the money on the conversion. So I think here we started off with the $100,000 conversion, but really what it is a $74,000 conversion, and you draw $24,000 out and pay taxes. And this has a problem because if you leave it in, you've got $100,000 in stock, the 10x's or 20x's. If you take it out, then the stock then you only get $75,000 or $74,000 in the Roth IRA. So you're only getting the 10 or 20x on $74,000 in stock versus getting the 10 or 20x on the $100,000 in stock. But there's the tax side of it. That's what's going to come up. That's the baseline, what we're talking about. So with the no Roth conversion, you keep the $100,000 in the traditional IRA. The traditional IRA grows to $1 million because you got a 10x. And the Roth IRA, you had $50,000 in the Roth IRA, that grows to $500,000. So your total value before taxes is $1.5 million. When you take the money out of the regular IRA, you end up paying $313,000 in taxes, and you're left with $1.186 million when you add it all up. So that's you don't do the conversion at all, you end up with $1.187 million. If you do the conversion, And here we got 75 and 25. It's really 74 and 26. So there's a little quibbles you could have with this, but your total income in 2024 is $50,000 your regular income, plus the $75,000 Roth conversion, plus the $25,000 that you drew to pay stuff. That's $150,000 in income. Your taxable income is $136,000 after standard deduction. You see the tax bracket breakdown, and your total tax liability is $26,000. That's why it should be 74 and 26. There's a shortfall here. That's just like a little bit of analysis. So your future growth, your $75,000 Roth conversion, plus this $50,000 that was already in the Roth, you end up with $1.25 million in the Roth. And you have nothing left in the regular IRA. And this $1.25 million is tax-free. So what was the scenario? You had $1.186 million in the no conversion scenario, and you have $1.25 million after tax. After tax, $1.186 million here, $1.25 million. So you actually clear about $63,000 more, which is, if you think about it, you did a $100,000 conversion and you got a 63% gain by doing the $100,000 conversion. Now, this assumes you got a 10x. You don't know you're going to get a 10x beforehand. If it only 2x's, the numbers might be different. If it doesn't go up at all, it might be different. Those are all things to think about, but just to give you some idea. And then I asked it, let's assume a 20x return. Now, the idea here is, look, I'm a Tesla believer. I'm a true believer. I think this stock is going to go up like crazy. We might get a 50x, right? But if you just do a 10 or 20x, what are the results? With the no conversion, you've got the $100,000 in the traditional IRA, the $50,000 in the Roth IRA. You don't convert. After 20 years of growth, your traditional IRA grows to $2 million because you had 100,000, 20x is $2 million. Your Roth IRA grows to $1 million. You work out the taxes on the traditional IRA withdrawal, and you end up owing $713,000 in taxes. You just go through these numbers here. What ends up happening in the 20x scenario is you have, at no conversion, you end up with about $2.3 million total. With the conversion, you end up with about $2.5 million total. The difference is a little less than $200,000. So that's a gain on the $100,000 that you converted. It's a gain of 200%. Got a significant growth on that $100,000 move. And you've got the 63% gain on the 10x. If you're 10x scenario, doing this $100,000 conversion, you get a 63% gain on the $100,000 conversion. In the 20x growth scenario, you get a 200% gain. If you are looking at Tesla stock as something that's going to grow dramatically over the next 10 years, then you can see there's a really large potential for very large improvement in your gains by moving as much as possible from a regular IRA to a Roth IRA. In other words, in the 10x scenario, you get a 63% gain by making the move. In the 20x scenario, you get a 200% gain by making the move. The reason this works the way it does is because when you're doing the conversion, if things work out right, you're paying a tax bracket of around 22 or an average tax of something like 20%. But when you're drawing the money later, if you have a very large sum of money in your regular IRA and you draw $1 million out in a year, you end up in the very high tax brackets in the 37% range, and your average tax might be 32 or 35%. So if you can take the money out earlier and pay a 20% tax and then move it over into the Roth IRA, and then later when you take it out of the Roth, it's tax-free, you've reduced your tax rate. And that reduction in tax rate becomes a really big deal if in the long run you're going to have a big pile to draw and you're going to be in a higher tax bracket later. If you don't get those kind of gains and you're, let's say, a high income person now, and you expect to be drawing a relatively small sum of money in the future and living a moderate life, then it may be you've got a high tax rate now and a low tax rate in the future, and it doesn't make sense to do the Roth conversion. So if you're already high income, you probably don't do the Roth conversion. If you're low income, I'm actually relatively low income. That's why I think about it this way. I make $30,000 a year as a content creator. So my regular income isn't that high, so I have a lot of room to play with the low tax brackets. I didn't do an analysis of what happens if Tesla stock only 2x's, what happens if Tesla stock doesn't grow. That's not how I think about the stock. I see Tesla being a massive increase in value. And then the question is, how do you do this? Now, there's a lot of other questions like, all right, if I draw money out of an IRA and I put it in a brokerage account and then I hold it and I earn capital gains, what happens in that situation? What happens when tax rates change? If Trump is going to do tariffs and he's going to reduce income taxes, where does that play in? One of the things that I'm really interested in is, let's suppose a Democrat wins in 2028 and they change rates in 2029. what do you want to do in the 4 years that you have low Trump taxes before the high taxes that are coming afterwards? And this may matter less if you're 35 years old and you're doing IRA investing, and matter a lot more if you're 60, which I'm in the ballpark of 60 and doing IRA investing, and you're thinking, okay, I'm going to be taking this out. What if you have an inherited IRA and you are forced to draw your money over a span of 10 years, which is what, when you inherit an IRA, the following year is the first of 10 years and you have to empty the account within 10 years. How does that play out? So these are topics I'm going to be covering in the next few videos. I think Tesla Tax Talk is a good topic to think about for that segment of Tesla investors who are using retirement accounts and are anticipating, I'm going to be drawing some money in the next 10 years or so. How is this going to play out for me? And how do I want to play the game of Roth conversions versus regular IRAs versus brokerage account and just getting capital gains? Trump may reduce capital gains taxes, and that may give an advantage to that side too. Please check out the t-shirts, Threat to Idiocracy at elonbits.com. Tesla's the next Tesla t-shirt, Teslanaire t-shirt, and so on. I hope you all become Teslanaires. Please support me as a YouTube channel member, as an ex-subscriber, the Daily Lie or Patreon. I will be posting specific videos with more details on my own personal situation, which helps me explain how complex the thinking can get and how you can try to work it out. And I'm not claiming I have the answers yet. And also, whether it makes sense to do long call options in a Roth IRA. What I'm doing right now, to be blunt, is I've got most of my Tesla stock, most of my Tesla investment is in Tesla stock in regular IRA or brokerage account. But in my Roth IRA, I have gone almost entirely into long call, 2-year call options, because if Tesla stock 10x's those 40x, well, where do you want your biggest gains? You want them in a tax-free account. So I'll go through that analysis too. I hope this is helpful to you. Let me know what you think in the comments or in the replies on X or the description, whatever. Let me know what you think. And again, please support me on the various platforms. Check out my other videos, subscribe to this channel, and thank you so much for watching.